small caps, which have really been hit hard this month, with the Russell 2000 down more than 8.5%. The index on pace for its worst month since September 2022. However, there are some under-the-radar winners in that group. Check out Sportradar. It's a company that collects and analyzes sports data for its clients. Shares are up more than 58% this year alone. Joining us for an exclusive interview on what's behind his company's recent rally, or the rally this year, is the founder and CEO of Sportradar, Carsten Koerl. Carsten, it's great to see you today. First of all, so let me just explain for folks who may not know, Sportradar has exclusive contracts with the NBA, Major League Baseball, NHL, FIFA to provide the data for those sports to the sports books, to the teams themselves and the leagues. Do you rely on further expansion of gambling in order to grow your own company?
Well, thanks for having me first, Contessa. From a perspective of expansion, that's fairly simple for us. We have all those contracts which you mentioned. These are our key partners. And it's not only the data, it's also the audiovisual. Well, that's also data in a stream, which we can enrich, which we can put into solutions, and we can sell it. And we reached that kind of tipping point that all those contracts are long-term. So most of them 7, 8 years. UEFA is the shortest one with the 3 years. But we have a portfolio here where we don't increase our costs much more. And that inflection point was visible in the last quarter. And that's what you see in the stock price. So we show that margin leverage because those contracts are long-term. The content is secured. And we put it in our solution. And we have, well, all the connections to the bookmaker market and the betting industry.
We're seeing the valuations of sports climb and soar. But I know that Sportradar walked away from the NFL contract as the data provider, leaving that to Genius, which, by the way, Genius shares, I know you don't like this, but they're up 40% year to date, far outpacing some of your clients. If you look at Penn and Caesars and others, they're quite negative on the year. When you look at the value of, say, that NFL contract, how much is it worth paying to have that? And at what point do you pull the plug and just wash your hands of it?
It's a complex thing. So we have a sensational team working on the contracts where we're modeling how do we earn money over the long term. It's not the short game, as you know. So if we are looking now to the NBA, it's a 7 years modeling. So we have exact information. How can we sell that? How can we put it into future solutions, which is a bit tricky to predict that for 3, 4, 5 years ahead. And then we are coming to a number. And we are very strict in this. So we are very strict in how we're managing those contracts and how we do the bids. And if we believe there is value in for us, we do this. If not, we don't do that. But everything should be in our target margin, which is a 25 to 30% EBITDA margin with a cash conversion of 60%. So if such a deal fits into those numbers, we are going for it. If not, and others might see a value in there, we're happy that they're going on this. But for us, it's very important that we are disciplined in the rights acquisition.